Hi, I'm Tom Lydon, editor of ETF Trends, here in Boston at the Charles Schwab Impact Conference, and I'm here with Jadallah, CEO of AlphaClone, and Brad Bredemann, who's head of distribution. Guys, welcome.
Thanks.
Thank you. Great to be here.
Guys, AlphaClone is a really new, innovative issuer. So, Maz, tell us about what differentiates you folks from others in the ETF space.
Sure. So I think fundamentally the biggest thing that differentiates us is that we're trying to solve one of the most intractable problems for investors, and that is for long-term investors, and that is manager selection. The number of products that are available to investors today, whether it's hedge funds, mutual funds, active or passive, has really exploded to the point where it's become a real challenge for the end investor and their advisors to really do well in selecting those products and those managers. What we've done is we've taken a public data set, Form 13 FHR, which every active manager who manages $100 million or more has to file with the SEC. And we use that form, we use technology to analyze that form in order to discern which managers have demonstrated true stock selection skill over a long period of time. And we developed this methodology that continuously picks managers who have demonstrated that skill. We aggregate their high conviction ideas into our strategies, and we offer those strategies to investors in a passive index or ETF like vehicle. So we solve the manager selection problem, and we're offering it in a way that combines the best of both active and passive, man and machine, to the investor.
I mean, all right, so simply speaking, you go in because it's all public for these big managers.
Right.
They have to file the 13F form. You're able to pull in and find out what they're buying, what they're selling,
Right.
and you can also identify which managers have done well and which have done poorly.
Exactly.
So you take the ones that have done the best, and then currently, based on what they're buying, what they're selling, those go into this index. Is that right?
That is exactly right. And Form 13F can be a very, very valuable tool to discern skill. If you think about evaluating a manager based on their actual return stream, a lot of things can seep into that return. The manager could be using leverage, the manager could be market timing, the manager could have trading skill. By using Form 13F to analyze the manager, we can strip away all sources of performance except one. Right. What did the manager hold at the end of the quarter? Right. So it's a pure form of discerning the manager's true stock selection skill.
How often is the index rebalanced?
Well, the form comes out every 90 days, so we rebalance our indexes every 90 days as well.
Great.
4 times a year.
Excellent. And Brad, just recently, you've taken this model that you created here in the U.S. and launched it globally, right?
We did, yeah. Thanks for mentioning that. Our first flagship fund is really a best ideas fund. That's ticker ALFA, Alpha. And in our international fund, which launched yesterday, ticker ALFI, we take the same manager set and we screen for their ADR holdings. So we build a portfolio that's international, all foreign securities. We start with a universe of roughly 50 securities, and then using an overlap methodology where we kind of build in some consensus and conviction, we actually get the portfolio down to roughly 40, 45 names.
Great. So same idea, just more of an international exposure. Correct. And especially for those advisors that are looking for really more of an active style, because these managers are in fact active, but in a passive model. As you go into 2016, that's something to consider.
That's exactly right. It's at the end of the day, the stocks that we choose are all fundamentally selected by the managers that we follow.
Right. Yeah.
So it's a passive way of getting very fundamental active exposure.
Right. Excellent, guys. Innovative and exciting. Congratulations, and thanks for being here.
Thanks, Tom. Really appreciate it.